The Chinese financial system has obviously made a lot of progress in the last 20 to 30 years, but there's still a very long way to go to build the financial system that China needs. In particular, I'm thinking about pension funds, a much wider set of mutual funds, insurance companies which produce long-term insurance contracts.
Last month, the Chinese government had declared a 5-year goal to further financial reform to promote stability of microeconomy and support the real economy. How do you look at the financial environment in China? What should be the key point of financial reform?
The Chinese financial system has obviously made a lot of progress in the last 20 to 30 years, but there's still a very long way to go to build the financial system that China needs. I think the main thing that's lacking in the financial system at the moment is a set of institutional investors. So what we see is that the main vehicle for saving for people is bank accounts still. The other two main instruments are the stock market, but that's had an up and down ride with the rise to 6,000 and then the collapse in the Shanghai Composite. And then real estate, and of course real estate has gone up and in some places gone down and then maybe rising again. But what's really needed is a much broader set of instruments in the same way that exist in many other countries. In particular, I'm thinking about pension funds, a much wider set of mutual funds, insurance companies which produce long-term insurance contracts and savings for life. And once we have those kinds of broad institutional investors, I think the markets will operate much more efficiently, and that will allow the banks to also provide a much better range of products and services.